Your audio's not up, young man, which is okay. I'm going to talk right over the top of it. You stay right there. I can do the sound. Dun, dun. March 7, 2019. And Mark, that means it is somebody's birthday in your life that you know, your father's birthday today. Make sure you give him a call. I want to welcome out our halftime crew, and we've got a lot going on in the markets. Volatility is something that traders should welcome. If volatility in the market, it's not a crazy market here. We're down 0.2%, but 4 days now where we've seen some selling. If volatility shakes you out of the market, you might be doing something wrong. We're going to break down all the analysis here on a Theta Thursday. We've got Cody. We've got Mark. How you doing, Cody?
I'm doing fantastic. Just took a little adjustment on getting the sound up there for a second.
That's all right. Hey, listen, I mean,
it happens.
It opens the door for me to be able to sing and really break some glasses out there, like William reminded me yesterday.
Actually, speaking of sound, I want to transition into my something fun for the day.
Okay.
This day in history was when Alexander Graham Bell invented the telephone. You can let your 9-year-old know because
yeah. I was traveling a couple weeks ago, last week actually, and I was gone here on the halftime report. And I got a text message while I was teaching a class up in Seattle, and it was from my 9-year-old daughter. And she says, "Dad, who invented the telephone?" And I instantly answer, Alexander Graham Bell. And she sends it back and she says, "No." And I just believed her. I figured she must know something I don't. Maybe she's learning something new. That's that new age history that they talk about in school, Cody.
The revisionist history. But no, but something even more fun on that is Alexander Graham Bell, after he invented the telephone and he got the patent on it, he went to Western Union to sell the patent to Western Union, I think for like $100,000. But back then we're talking, quite a bit of money. And Western Union didn't think it was worth the investment. They didn't think it was going to go anywhere. So Alexander Graham Bell decided that he was going to be an entrepreneur, just start his own company, and it became this tiny little company we know today as AT&T. So,
was Elon Musk the CEO of the company that rejected the telephone?
But I mean, Western Union, what are they doing now? Like for the longest time they were just sending money, but of course Venmo and other companies like that are going to take that away. Western Union's going to fade away in the distance for not buying the patent to the telephone.
I think, Mark, Western Union is still publicly traded. I have not traded them in a long time, but I believe they are. I'm going to look that up. Cody, look it up.
Ticker symbol WU.
WU, there you go. Well, what are they doing today, Cody? They are flat to down. Their weekly chart looks ugly, and they are sitting in a compression range after a recent earnings report that was not very strong. So that's what they're doing today. Trade the chart, trade the information. Maybe Venmo and all these other payment processing systems are going to put them in the wayside. But I got to tell you, I've used Western Union in the last couple of years, so I don't know.
Yeah, I also don't know what they're doing overseas and things of that sort. So I'd have to look into it before I completely dog.
Let's dive into it. Mark, bring your screen up. Let's get down to the markets.
Hold on. While you guys were yammering about, I don't have any idea what, I tuned the freak out of that conversation about the second it started. I've been looking up words that start with TH, because what if I don't want to do theta strategies on a Theta Thursday? I need another TH word. I got thug. I got theorist.
Well, we could do theoretical pricing.
I got thump Thursday.
We could do option theory Thursday, where we talk about
what about
Delta
thump
Gamma
Thursday?
Theta Vegas.
Somebody come up with a strategy, and we'll name it the thump. And then we'll call it Thump Thursday.
Okay. Let me creatively put together a volatility crush strategy. We'll call it the volatility thump. And then we'll do something along those lines. I'm open to it, but for now it's Theta Thursday. Because our traders are a lot of cash flow, and Delta Theta combos is what our traders do. So unless you have a better thump idea today, we're doing Theta. Bring up the SPY if you would. Now, you like ETFs, which I will respect that while you're running your screen. Obviously, we can bring up whatever you like. And we've talked about this before, but I don't think you can talk about it too much because we have new listeners coming and going all the time. Why do you prefer the ETF over?
All right, I believe we are back up. That should have fixed the problem. We will see.
And I think we might be up now, and we are live back on YouTube. And Cody, so that doesn't actually change the channel link, and so people don't have to go find the new link. That's cool, interesting.
Yep,
Good catch on the frozen video. Mark, bullish pullback, 4 candles in a row. Is this going to pivot and run, or are you more concerned about further selling? Let's just start with that.
Well, I've been for 3 weeks saying that this was coming. If you've been on the Traders Lounge, shameless plug inserted here in our pro membership at Tackle Trading, I've been talking about this in our morning show for 3 weeks, that there isn't that catalyst, there isn't that sentiment. It's just had a nice run, and this was eventually going to happen in this situation if a new catalyst didn't emerge. Let's take off those moving averages real quick and just look at pure price action. And the longer after a run, and this is if you go back and look at 10 years of history of runs in the market, the longer it trades sideways, the more chance negative sentiment has to creep in. The longer you trade sideways after a run, the more chance that this occurs. And so with nothing on the calendar or no spark to help send that market higher, for example, if we were in the middle of earnings season, that might have sent it higher. If the trade deal actually had been finalized, that might have sent it higher. If the Fed had announced a rate cut coming this year, that might have sent it higher. So there's all kinds of things that could have sent it higher, but the longer you trade sideways after a run without that spark, without that sentiment boost, this just is normal price behavior. Just absolutely normal price behavior. Now, listen, if you've been trading since the start of 2018, anytime you get any kind of sell-off, it's going to cause a little bit of concern. We've had a couple big ones, haven't we? We've had some really significant sell-offs over the last 15 months that have affected portfolios. Right now, and each of those could be traced to something specific, and specifically with the Fed. Both of the sell-offs were triggered in 2018, and the negative sentiment was primarily about the hawkish policy of the Fed that really spooked the market. We got a little bit of soft data out there, and what I mean when I say that is the economic reports. Some of them are all right, some of them not so great, but there's no huge bearish catalyst right now either. And you have an accommodative Fed. This is likely, highest probability when you analyze everything that we have to work with right now, is eventually this is going to catch a bottom. You're not going to go retest those old lows unless you have something new. Now, the one big concern I have is tomorrow's unemployment report. Because if for whatever reason that thing triggers, it could exacerbate this short-term sell-off. But you don't have the same bearish sentiment that you did in the February sell-off that led to the volatility in February and March, in the October sell-off with the worry of the Fed. You don't have those same kind of storylines that really can propel a market down and down and down. So barring the Fed shifting stance, barring that Chinese trade deal collapsing, barring economic reports going off a cliff, you got to have something to really cause fear. There's not any real fear right now in the market. This is just normal price behavior. I would even argue potentially, and I've been trying to think about this, today and this week, there might even be more resolve now than there was in the past, because you have an entire field of investors who took one on the chin in the fourth quarter and saw the market battle back. So a lot of the passive type investors who are long SPY or long equity through mutual funds or index funds, they're like, well, if the market sells off a little bit, it will come back. We still have a strong economy. I wonder what that's done to sentiment right now. I know technically you've got a mixed market. If you look at the SPY, we've got a red weekly candle for the first time in a long time. We had selling pressure before, but the volatility is not wild here, Mark. I mean, we're down moderately for 4 days, nothing crazy, but we're down a little bit. And there's some stocks that are really weak and other stocks that are neutral and other stocks that are still screaming bullish in beautiful retracement patterns. It really is going to be a good weekend for those reports, because you're going to have
bullish, bearish candidates across different sectors and for different purposes. I'll tell you, there's two sectors up today. And what you talk about the weekly, go show us XLU and XLRE, because it's a classic sector rotation here today where we're seeing strength in these dividend and interest-bearing type products. How do you read this whole market as you look at it from a sector perspective and strength and weakness across different sectors and stocks?
Well, I mean, you got to know, knowledge is king. You know, we go on all the time about education, and sometimes it might seem self-serving, but right now we're on a free program talking education. Education. And education is king in knowing the different areas of the world that you're investing in. XLU and XLRE, I have both been very bullish in all year because there is a correlation in these sectors with Fed policy. Mm-hmm. So, and I was going to say passive, but that's not the right word. You have a type of investor who's primarily focused on dividend type returns. Now, if bond yields are going up, even if they can get a little bit higher return from dividend paying stocks, they'll typically gravitate towards the bond area of the market. But if the Fed is signaling that they are going to freeze rates or even potentially lower rates, well, you see a gravitation back towards the dividend players, if you will, which basically the only, REITs and REITs and utilities, that is kind of their primary purpose in the world of investing. But if you go back and look, let me get a little bit longer time frame, monthly candles to axe that out. There have been time periods over the last couple of years where Fed policy really weighed in this area of the market. The start of last year, as the Fed was really, really shifting towards a more negative or hawkish, I don't view it negative, some people view it as negative, a stance, you saw REITs and utilities sell off long before the volatility in February. Mm-hmm. They started selling off as the market was rising, going through the roof. These dividend paying stocks were going down because the Fed was hawkish. I found a fascinating little statement someone made, as utilities are hitting their all-time high. It was a sarcastic comment, but they said, how bullish of a market can it really be when utilities are leading the market? and I got a kick out of that. But these dividend areas of the market are very popular, and they become increasingly popular when the Fed gets soft on their monetary policy.
Yeah, by market cap and weight, utilities are not leading the market, quite frankly. I know the chart looks good and it's at a high point, but that doesn't mean it's market leadership. Market leadership's been industrials, and Boeing is on a pullback. We'll get to that one in just a minute. But before we move past the S&P 500 mark, I want to talk about a few stocks that are grabbing my eye today that are showing leadership. AGN, for example, Allergen. They had a study come out that they were actually not going to pass some clinical trial they had. Initially, the stock looked like it wanted to sell, and then it completely pivoted and rotated back up. Now, this is an interesting pattern because it has every characteristic of reversal, and it has every characteristic of clear air here. Do you trade these bottoming patterns when they start coming off?
Not on pharmaceutical companies. Mm-hmm. I love pharmaceutical companies for different strategies because there's more news on pharmaceutical companies than your average company. Mm-hmm. A lot of times an individual company, the only news you'll hear about it, unless it's one of the big ones like Facebook or Apple or things like that. But for a lot of companies, it's the quarterly earnings report and then the next quarterly earnings report. There's not a whole lot of news in between. With pharmaceutical companies, you wake up every morning not knowing what the news might be, because it can be very dramatic because they all have different drugs in different stages of the trials. And so you can really get hit both sides of the coin on pharmaceutical companies. Mm-hmm. I've seen really weird behavior following once that initial surge follows out. So I would treat today on Allergen like I would an earnings report. Give it a few days for volatility to die out, and then true sentiment will emerge.
Yeah. Yeah. And pharmaceutical or biotech companies that are sensitive to FDA approvals, obviously you have risk there. If you were going to go long, this is a candidate for like a bull call spread to limit that risk, limit that exposure. Long equity with these types of companies, to me, has a different level of risk that I'm personally not comfortable with. Another one that is actually grabbing my eye today here, Mark, is one of your favorites, EA. Finally showing us some strength. I mean, it's been trying to play defense here for a bit. It's on my watch list, and it held 95. Good green candle here. This is a tricky one for a trigger. You could argue that it's triggering now, by the way. You could wait until it breaks above 100, but there's also a tail up there just above that 100 mark. How do you approach a situation like this that is more in a consolidation, but at a pattern that we have expectancy that it will run? What's your read?
I mean, I would apply sentimental analysis in this situation because, like you just said, there's lots of potential trigger points you could have. For example, it might close above moving averages and you get a move up. You could use different pivot levels, those high points in the range, on how aggressive you want to be. Now, you could just use $100, that nice psychological number. But I would also have to know what, in my analysis, and I follow EA. I follow EA every day. I don't know what the news was. It almost 100% had something to do with Apex Legends.
Unless it didn't hit the financial news wires, it could have been something internally that maybe people who are really tracking the inside stuff know about. But all I'm seeing is a rotation out of other gaming stocks.
All I know is that the naked put I sold on EA is going to expire worthless now.
Well, it's Theta Thursday. There's your thump Theta Thursday, my friend.
How about Thursday? I just stole money from that option buyer. Someone bought that option from me, and I just stole it from him on EA. It's my money now. I stole it from you, option buyer, because you didn't believe, or you were just doing some random system and buying out of the money puts.
You were probably trading with a computer there, Marky. I get it.
I know, but it feels so much better when I thief it on a Thursday.
I like it. All right. And if anybody out there has a good idea for a rhyming TH sound for Thursday, Mark wants a new name.
I'm going with thief. I'm going to steal money from option buyers. So it ties into Theta.
Yeah. I got it. Other companies that are flashing in front of me on the S&P, by the way, are the home builders. D.R. Horton is one of them, Toll Brothers, all of them. Look at XHB real quick, or Toll, or any of them. And we're seeing a very similar pattern in all. We have higher high, higher low. All of them were on a pullback. Now we've got a green candle here. What's going on with residential construction? Number one, we're in a messy zone right here with all that moving average congestion. What's your approach to construction right now? Because we've had a lot of data out of the real estate and construction sector recently.
The data has been soft. The data has been soft going back several months. I mean, a lot of these companies in the home building sector really suffered from a general paranoia or proper analysis, depending on what side of the aisle, that rising interest rates would curtail home building. And maybe wasn't quite paranoia, because the data lately has been really, really soft. And analysts that follow this area of the market very closely point towards those. It's just higher interest rates impact buying. Mm-hmm. People are less likely when rates go up to buy a home. It's just that simple. And so that data for the last 4 or 5 months has been, kind of soft. I don't know what today's news is. I mean, this is a pretty good jump for percentage wise. You don't usually see this type of price action, but it's a pretty good jump.
Well, Toll Brothers just one of them. It's not just that stock, though. Percentage-wise, we're up 2.5%. I actually think Adam in the chat is saying they might have even had a downgrade recently from J.P. Morgan, but I'm seeing it in D.R. Horton. Bring up XHB. I think they all look the same. Might be a rotation just into real estate in general here as we're looking at some of these companies. DHI looks good as well. And whenever Cody turns
that
his
doesn't
video
look like a
on,
rotation. That looks the big ones. So I mean, when you go to it, XHB is only up 0.5%. This is the big home builders are the ones, your larger cap and your upper mid cap home builders are the ones that are getting the real price appreciation. Once again, I don't know the news. Oftentimes there's a little spark, a little something that just helps create short-term momentum, day trading momentum. But obviously an encouraging sign helps stabilize, because a lot of people use this. Since we're talking about Thief Thursday, a lot of people have covered calls on home builders. And so this kind of spark helps stable that price and creates those. I know a lot of individuals in tackle trading have covered calls on different home builders. So
Cody, young man,
it's been a great environment going back for 4 or 5 months now on home builders for covered calls.
For sure. Cody, come in and speak your mind. Obviously, I know when you have something to say, by the way.
No, I'm fine here. Mark made a good point there, so I'm gonna let my comment sit for now.
On the loser side,
that is a young man learning in life right there. That is Cody, whatever he had on his mind, he would have said 6 months ago. But with age comes wisdom.
Sometimes.
There are a few days that Mark and I actually agree on things, and we're against the rest of the coaches. So,
well, yeah, whenever Trump comes up, Cody and I.
That's true.
We're like, we're your Trumpers in the audience.
The technical versus fundamental argument. I feel like we agree.
I don't think there's any logical argument when we get into those discussions.
Say la vie. All right, rapid fire through some losers. I've got some interesting ones here, Mark, on the S&P. Some of the retail names, Urban Outfitters, Ross Stores, they're down. But the one that's really grabbing my eye.
You know why they're down? Because who in the world would invest in retail?
They've been on our bear list for a long time for a reason. I mean, and Coach Frank brings them up all the time, even Macy's. I mean, how many weeks have we put Macy's on the option or stock report and said, just wait for that breakdown?
And now that because retail had its earnings season, okay, there's just weakness. You have a lot of people like me that even if they don't go bearish, they just want no part of the bullish end of retail, just zero part. And so you have a lot of participants just sit out. They don't even look to buy this area of the market. And then you just got through retail earnings season where tons and tons of retail companies came out, released their earnings, and now you're getting really nice technical signals in which people are jumping on.
Yeah. And it's not just Macy's or Urban. I mean, it's literally across the board. You've got a bunch of them. I'm looking at the retail holders as well. They are selling a lot of stocks under pressure in that regard. There are still some big box retailers that are holding up a little bit better than others, which might hold up that sector. But man, some of these niche names, they are just down. Another company that was on our option report this last weekend and is triggering, confirming, whatever you want to call it here today is FedEx. FDX, double top, M pattern, breaking below support, breaking below moving averages. That to me is a beautiful setup. Now it's not a tight stop loss if you're going to manage it well because it's running. And you might even argue that you should have some kind of limited risk spread instead of just straight old short stock because of the $175 price tag and you'd have to put a stop loss up at 185. What's your read on FedEx and how would you approach this, Mark?
Not a company I actively follow as far as knowing every minute detail of their company, but obviously we all know who FedEx is. But from a technical standpoint, really, really, really pretty chart for a bearish setup. I mean, you got lifted up in January, like basically the whole market did. The question I ask when I'm teaching this general principle is like, did FedEx do anything right to get lifted up in January? Or did it just get lifted up with everything else in the market? And obviously the answer is, rising tide lifts all boats. That's why you don't like to go short when the market is on any individual stock, when the market's taking off. But then you have that just trade sideways, show weakness, start to break intraday and multi-day support levels, start to close below those ranges, triggering in multiple ways. And now you have a lot of room to the downside. So really, really pretty technical pattern. And you see a lot of these across the market right now as a whole.
You've got 12 days until the earnings report. And we have a general rule when we're doing scouting report planning that if it's not 14 days out, we won't put it on the list. But now when you're 12 days out, you could trigger into a swing trade. How does that impact your thinking when you're building trades?
I mean, it's tough. I mean, because like you want to have chance for a stock to run. Like when you get into a swing trade, a short-term trade, you like to have that hope that you can have it last for many, many weeks, even months on some of those really, really strong runs. And so whenever you have earnings just around the corner, which 12 days in trading is kind of just around the corner, it's tough because you have a shorter window. And so you can still take advantage of those opportunities, but you just have to tighten up your time frame. Probably be more aggressive with your targets, probably be more aggressive with your stop techniques, be more apt to take quicker profits and manage that trade in a quicker way than maybe you would ideally like to.
Sure. Other companies grabbing my eye here, Kroger, Mosaic, a bunch of other ones. KR, and Mark, you made a really good point. We were talking with Matt, you and myself last night when we were updating the last things on the Tackle 25 before the mastermind group. Packaged food companies have had a hard run. And Kroger is one of those types where grocery stores, services, consumer staple, they missed on earnings. They're down more than what is normal for a stock like this. What's your read on this sector and why are they having such a hard time?
Well, I mean, you don't have a lot. If you're just looking to get grocery store companies themselves, you don't have a lot of choices out there. A lot of people used to like to trade Whole Foods before Amazon bought them. Amazon's eventually going to conquer everything in the earth and buy everything. And so Whole Foods I love trading Whole Foods, but it got bought by Amazon. So if you like grocery stores, and Kroger is a huge chain, absolutely mammoth chain. This is the type of company I like to get into when it's really, really, really cheap. When you have those bottoming patterns where it hangs out for a couple months, and then gives you a reversal signal. I like getting in for a little bit on these type of companies. They pay a little bit of a dividend, not much, but like getting into these type of companies that I don't see going away. We're always going to be shopping for groceries. Kroger has a foothold across the country, thousands of stores. But there's a lot of movement that you can possibly have down. A lot of movement you have to have down.
Is there any canned food item that you have to get the premium brand label on?
That is on our Thoughtful Thursday segment.
Well, it's Therapy Thursday as well, according to Ellen, which I thought was the most creative one.
Ooh, therapy I like that a lot, actually. Ketchup.
Ketchup, maybe.
Yeah. I don't trust
non-brand. For Therapy Thursday, coming to listen to Justice Brothers, like to me, it's not.
It's our therapy. It's not theirs.
Okay, that makes y'all are getting your thoughts on.
No, it's their therapy. I mean, our therapy, not theirs. They're our therapist.
Oh, that makes sense. They're listening to you guys rant. Gotcha.
Well, one thing that was great therapy for years of your life, Mark, were casinos. And Wynn Casino actually is running here to the downside.
I want to know what brand you would like. Is there any like generic label? Because there are a few things that I will buy.
I will buy premium all the time. But as far as a canned food item, maybe like cream of chicken soup. For example, I bought the generic one. My wife looked at me like, this is one thing that you don't go cheap on. You get the better cream of chicken soup or those types of things that you're going to use in casserole dishes or whatever.
Because there's a huge price difference. I mean, you go to Walmart and you buy what is the Walmart generic brand?
Oh,
Great Value.
Yeah.
Great Value. So, like I buy a lot of Great Value products. But there are some areas I won't. And that's interesting because if you're going to invest in packaged food companies, there's a huge difference in margin on those products.
So I heard this one time, and it's actually a pretty good rule of thumb. Never go cheap on things that connect you to the ground. So like your shoes, your sheets, your mattress, things like those are things. And then it makes a lot of sense. Like you want
Cody, I know you bought a cheap car, so your theory's blown out the window.
It's not. No. I bought a good quality car. It was a used car, but it's a good quality car. So
Not a bad theory. You need to buy good sneakers for sure. Do not skimp on sneakers. Your feet matter too much for that. Let's move on to casinos here, Mark. Obviously, so much of the profitability of these casinos, these international names like Wynn, which might be the biggest in the sector. I know it's one of the biggest in the sector, is tied to profits out of Macau and China. There was a report that some of that was down. You've also had some weakness internationally. What's your read on this Wynn casino here?
Okay. The same with basically all casinos. When you look back over the last little while, certain areas of the market get hot, certain areas are cold. Casinos has been kind of cold going back almost a year now. Whenever you get these sentiment shifts, you can get nice reversal trading signals that provide good run-ups. But, it's just been kind of a weak area of the market. So outside of reversal signals, you go back, because casinos started selling off long before the mess in October.
Yeah.
Casinos were selling off. So, some of that lingering, it takes a long time sometimes for sentiment to truly shift on a stock or on an area of the market, a specific industry. And so this lingering bearish sentiment in casinos as a whole, you can still find nice short-term trades. There were some really nice casino trades. We had casinos on our reports a few times, and they ran up really nicely. But don't forget the longer-term trends. Whatever the short-term, remember, when we look at some of those longer-term intermediate trends, casino have been kind of a mess. So, when you see a reignition of that longer-term mess, it's not exactly surprising.
Last one on the S&P, then we're going to move on to the Dow. The other indexes here is Mosaic, and really enjoying the conversation. Welcome out, Halftime Crew, by the way. Those of you who are coming in late, we've got about 75 people here live. We usually get about 300 people on the replay. We want to hit that 50% Fibonacci retracement on the likes. And I know that I always give a shameless request for that. I'm not.
Listen, it is Therapy Thursday.
That's right.
If we don't get likes on that percentage we'll be depressed all day.
I won't.
Tim will beat his kids. I'll yell at my date tonight. It's just going to be a terrible, terrible event if we don't get those likes. So
I like that. I like that a lot.
Mosaic, you like the beating your kids joke?
I thought it was funny. I do. Maybe I have a dark sense of humor. Chemical companies are one of the only reasons why the material sector, for me, it's one of the industries within that sector that's shown weakness here, Mark. Mosaic is a big company, and they're down again today. I saw a report from them. Reduction in phosphate production. They had some kind of stuff going on with some of their mines, their productions, whatever it was. What's your read on chemicals, number one?
Well, when you go to agricultural chemicals, and you got to separate general chemical companies, diversified chemical companies, and agricultural chemical companies. Agricultural chemical companies, I treat like commodities because that's what they are. Their main product is a commodity type product. And while we're used to oil, while we're used to gold, while we're used to some of the big ones, the price movement of the commodity itself is the dog that oftentimes wags the agricultural chemical company's tail. Say agricultural chemical company 5 times fast.
No,
it is not easy.
Cody could try. I'm not going to do it.
No. But the one thing I've learned, this is an area of the market I really like when they bottom out and give you some reversal signals, because they can have some really, really powerful short-term trends develop once those reversal signals happen. But make no mistake, when negative sentiment hits this, like a lot of areas of commodity, you can see rapid price depreciation. So it is definitely a company following its earnings that I'm going to go look and see if it is company related or if there's a shift, because there's a lot of room to the downside for a bearish trade here, isn't there?
Yeah, there is. If it breaks support, there's no question about it. Move on to the Dow as we keep working through our daily routine here, working through the indexes, different companies that are grabbing our eye, top-down analysis style /YM or DIA, either one is fine. I'll tell you, there's a lot of interesting companies on the Dow today. There's not that many companies up. Verizon is one of them, VZ, in a compression pattern, very much neutral from a long-term perspective.
One thing you're seeing is, what are you seeing? XLRE, XLU. VZ. You're seeing dividend paying products holding up today.
Yeah, 2.4% dividend yield on Verizon, and more of a defensive type stock. There's no question about it. When you see leadership out of Exxon and Verizon on the Dow, that tells you, not a great day on the Dow. There's only 5 companies up, Mark. But I also see leadership out of Cisco, and I want you to bring up Cisco here because it's approaching a breakout point at a 52-week high, and really just a juggernaut.
I'm having a brain.
CSCO.
CSCO. I was trying to put 2 S's and 2 C's.
A $230 billion company hitting into a new high point, Mark. Real market leadership and market strength here. I don't know about you, but that's a beautiful trend.
Hey, here's Mark Justice technique, how Mark Justice trades. All right, so when you have the broad market selling off, I go to my 2 short-term moving averages, that 5 and 9.
Mm-hmm.
You want to find out what's really strong today, what has really strong sentiment. Are they holding those short-term moving averages while the market's selling off for 4 days in a row? Who's holding that short-term momentum signals that so many computers and short-term traders like myself use? Cisco, holding it like a champ.
Yeah.
Holding it like a champ.
Just a beautiful chart. There's no question about it. It means riding those MAs. It's approaching the breakout point at 52 as well.
Yeah, I mean, seriously, if the market stabilizes,
Yeah. I agree. That's why, obviously that's why it's on my list as
good
well.
Good chart.
And Nike is a little bit different because it's not holding that momentum line, but I do like the retracement on Nike, a little bit of a pullback.
There has been really strong sentiment on Nike going back about 15, 16 months. Nike's gotten caught up in volatility in the market. Nike's got caught up because it has a lot of foreign sales. Nike's got caught up because people hate retail and people sell Nike shoes. There's all kinds of things. And still, with all of that negativity in other areas of the market, Nike has stayed strong on sentiment. Investors really like this stock. Mm-hmm. They really like this stock. And so, it's a big company. It's going to get dragged with the market. It's not the type of company that's going to go to $200 tomorrow, but really high up on my list, you get market reversal signals. That is a pretty retracement pattern right there.
Agree, 100%. another retracement, and I'm seeing a ton
Timmy,
of
you are giving some all-star. I might have to rewatch this show to get all of your charts because these are beautiful charts. You're giving us a lot of bearish charts. You're giving us a lot. I mean, I don't need to do work anymore. I just need to come listen to you at the halftime show and just.
I need a T-shirt.
That's what everyone should do. Is just come watch us the halftime show.
I'll be the lead
because these are some really pretty charts. It's Cody, almost like you actually work and do some work before the show starts.
We need bird dog T-shirts because I want to be the lead bird dog is what it is for today. We'll have to give an award for the lead bird dog every week, all that kind of stuff. That is still my favorite phrase that we've come up with in 2019. Boeing as well, Mark, and BA, I got to tell you, this has been a stock I've traded frequently. I know it's not as strong as the others because of candlestick relationship, but that's a little bit of a hammer candle developing here. If you can close on strength, Mark, deeper pullback, subtle differences between Nike and the other ones. But what's your read on Boeing?
Listen, Boeing had a great run. It was a great short-term trade pick, home run short-term trade pick. Got a little bit messy. As the markets pulled back because it had went up so much. If you go back and analyze Boeing, I did this on the lounge the other day. If you go back and analyze Boeing is a series of big runs, pull back, take some time off, nice, huge momentum runs before repeating the same process over and over. Mm-hmm. Boeing got caught up last year where it basically took the year off and was down on the year because trade war concerns jolted it. The recent fundamentals, people love this stock, as far as the investment. I'm not talking about us. I'm talking about analysts. I'm talking about the investing community as a whole. They love this stock. But guess what? People had made a lot of money on Boeing over the last couple months. Natural profit taking occurs. People are waiting for the next trade setup. Mm-hmm. It's one person's sell-off is another person's, hey, I'm very, very, very interested in getting in on the next strong bullish signal on Boeing.
I love Marie's comment in the chat here. Lead Bird Dog is the coach with the most approved picks during the scouting report meeting.
I was literally about to respond to her.
Yeah,
the problem is we have a lot of overlap. You'll end up with like 20 or 30 picks that every coach has put in there.
Hey, I like it. I like it though. Good concept, good idea. Well,
I got another stock for you.
Yeah,
one I've been talking about for a while. PANW. PANW.
This is a beautiful setup. It's been a beautiful setup developing for a while now. Now, for me,
that's so pretty.
It's a beautiful chart. You know, you gap out on earning strength. You know the fundamental reasons. You have volume increasing on that. It backfills as the market retraces into moving averages. You get a doji candlestick and then a confirmation candlestick. Guys, I got to tell you, technical analysis is a beautiful thing. It doesn't work all the time because we can't predict the future and every element that can come down the pipeline, but it gives us a probability mark. And that is,
for example, tomorrow's unemployment report could come out and ruin, regardless of what side, it could ruin your bearish setups, could ruin your bullish setups because we don't know that major event. But that right there on that chart is a textbook put in the technical analysis retracement book that you teach for all time. That chart is so pretty.
Mm-hmm.
That's beautiful.
Yeah.
I got all of these beautiful charts. Which one do I ask out in the next couple days?
Choices, my friend. That is the thing about trading, is that you might have 30 stocks that are qualified. You can only trade so much. We all have limited capital, whatever that is. So you got to make choices. That's where you qualify based on reward, risk, and probability and whatnot. Great call on that one, Cody. There's a lot of other ones we're going to keep running through. Give me the NASDAQ if you would. QQQ. Used to be the quad Qs and they changed it to triple Q. Why'd they do that? I don't even remember now. It's 10 years ago, but remember that? Quad Qs when we started trading, Mark?
What is this, our Think Back Thursday segment?
I'm trying to think.
Think Back Thursday.
I think it's because they moved it from the Amex to the NASDAQ and they had to relist it, if I remember now that I think about it. NASDAQ is holding and coming back. And we were down more, but now we're down less. We're coming back on the intraday. But I'm seeing some interesting action across certain names. First off, read this tech sector in general and just kind of talk about it relative to the other parts of the market, what you think is strong and weak.
Areas of the, I'm real. Okay, first of all, memory producers in tech, you want to be very, very wary of right now. There is some negative headwinds in DRAM, which affects companies like MU and WDC. So there's certain areas of the market where negative headwinds are starting to build. But, you know, it's, I mean, tech, oftentimes investors make the mistake of lumping just tech together. It's all one big tech palooza. Company that I really like on an upcoming reversal signal is CRM.
100%. I mean, you look at CRM, Oracle, Adobe, and Intuit, they're all up today while communications are down. Telecom is up today.
Software got caught in this little, oh my gosh, day traders took over sell-off the other day. And it was like this orchestrated attack by computers and day traders that hit after CRM's report. So CRM fell. Now, I will give you a stat. I found 7 analyst ratings. And I shared this the other night on the Coaches Show. 7 analyst ratings on CRM after the earnings report.
Mm-hmm.
All 7 raised their price target.
Yeah, I saw that.
All 7 raised their price target. Sometimes, and this is why trading earnings is tricky. Aside from the huge loss you can occur because things like Kraft Heinz, gap down, there's just a lot of volatility and there's a lot of action that doesn't necessarily reflect the true investing sentiment or the true actual report itself. Trading earnings is tricky. I don't do it. And I don't trade for 3 trading sessions after earnings. I just don't want to mess with volatility.
Yeah.
You know, but this setup on this company, yeah, sign me up. I just got to get my signal now.
Yeah.
I just got to get my signal.
Well, and in that application software industry, you have Oracle and Adobe as well, and they've both been fairly strong. I mean, I like CRM because I like the company. I believe in the leadership and I like the fundamentals, but Oracle looks great, you know.
I mean, Oracle, once again, on Monday got hit as part of that orchestrated software attack. It's almost like they had a virus for those few days, for that day. But there, you see it rebound. You see it rebound.
Yeah.
So Adobe got hit on that day. There was a huge lesson on Monday. Sometimes we forget because the market's been going up and down together, and it just seems like everything's trading in the same direction. Mm-hmm. You will see industries do better or worse. It was a real good reminder that, hey, if you're going to have 5 bullish trades out there, don't make them all in the same industry or the same sector. Mm-hmm. You know, diversify your trades a little bit, spread them out a little bit. So, but CRM.
Give me a quick peek at FXI. Let's move on, talk about China. When I was looking through the NASDAQ charts, by the way, I saw a lot of the losers, Baozun and Weibo and C-Trip and all these different Chinese companies that are just showing pressure here today. JD.com, a lot of them are down here. Obviously, there's going to be volatility in the Chinese stock prices, like there's been volatility in all stock prices. What's your read on FXI market?
Something's going on in China, and it has major market ramifications across the board. They introduced a new stimulus package over there. There might be something structurally weak in China right now, and you've seen that in the economic reports for several months going back. And the fact that the Chinese government has been on like overdrive to stimulate the market through manipulated policy. I mean, where did they get that idea from? Mm-hmm. You know, like, you know, it's almost like, they stole that IP from us. We started manipulating monetary policy. We own that as Americans, mm-hmm. stealing our IP,
Company grabbing my eye on the NASDAQ.
But no, this is an area of the market. Like, be wary China. China in 2015, problems in the Chinese economy and in their financial structure took down the markets worldwide. Mm-hmm. So this is an area that you just need to pay attention to China a little bit more, because normally those stimulus things that occur this week prop a market up. And there might be nothing in the entire market that worries me more right now than this. Mm-hmm. Because normally those stimulus measures, markets love. That's not what we're seeing this week, is it?
No, it's really not. Moving into a different industry here for a minute. Give me Tilray, TLRY, if you will. I know we talk about Cron and whatnot the other day about a cover call, and Cody was talking about how he manages it. Tilray was the big name that caught everybody's eye when it exploded last year. And it went from $25 a share to like $300 a share in 2 months. And now it's back.
Now, to be fair, it was at $300 for 14 seconds.
Fair enough. And then it did sell right back down to like 150. When you see a company like this that is very hard to understand the volatility, I would think is fair. But now even that looks like a compression range. Mark that small little red candle on the right. It's down 4.5% here today and approaching a support. If you broke below support on the major level here, is that tradable?
I don't trade marijuana stocks.
Yeah.
Yeah. I mean, you're going to have to ask a young man who is hip and cool his opinion on this. I don't touch the marijuana area.
My opinion is, regardless of what it is or does, I would rather have the one that's more fundamentally sound than Tilray. To me, isn't there in this, because it is a new emerging market that's coming out, hot in that industry. But I'm not going to go for the high flyer that like Tilray. I'd rather go for the one that looks more like a fundamental business model and not the let's just go out there and sell as much of this stuff as we can with no rhyme or reason of how we're going to manage it. Mm-hmm. Regardless of what you're selling, there has to be good management behind it. So I would say if you're going to look at these type of companies, look at the fundamentals as well as the technicals.
Yeah, I mean, maybe I'm just old-fashioned, but the marijuana industry for me was my, pot dealer when I was 24 named Javon, and I wouldn't invest in Javon. I'd buy from Javon, but I wouldn't invest in Javon. So
slightly different business model, I believe, since they are actually working with
Javon's doing
to
these
open
days.
Up new markets. He might be investing in Tilray. Who knows?
He might own Tilray.
He might own Tilray for all you know. That's exactly right. I say la vie. There are so many stocks on the NASDAQ that are just flashing out at me, but I want to move on to the RTY and talk small caps. Just looking at the clock here as well. And IWM, obviously, small cap performance is going to have a higher beta performance than, say, the S&P or the Dow. And when the market sells, this will sell more. And when the market runs, this one will run more. And they have ties internationally. So when China sells, this is going to fall as well. What's your read on small caps here, Mark?
Like, I don't follow small cap companies at all, like zero. I mean, I understand the general trends and, the shifts, like you say. Sometimes small caps will be hotter or colder. The one thing that concerns me about this chart is the moving average pocket, like the lack of discernible support propping it up.
Mm-hmm.
I mean, that's always going to concern me on any chart. But and this is a lesson. Like, a lot of times, new traders and new investors, they get overwhelmed because they try to learn everything. I stopped trying to learn and becoming an expert on everything a long time ago. I stick to about 300 large cap companies that I rotate through. I stick to certain areas of the market, and because you don't have time. You do not have. Tim, if all you did was read reports coming out of companies, earnings reports, how many could you even get through in a quarter?
You have to focus on priorities. And really, if something's a watch list company like Tackle 25, you got to dig into it more because that's something you're watching over and over again. If it's an industry leader in an industry you pay attention to a lot, you got to dig into it. But you do have to prioritize on a daily basis. There's too much to do.
But as a general rule, small caps will go with the market as a whole. Sometimes their losses will be more pronounced, as Tim says. Sometimes their wins will be a little bit bigger. They generally trend with the market, as we see this year. It's just that chart's kind of really bearish.
Give me the US dollar. Let's move on to currencies, commodities, and all those kind of things. And it's Therapy Thursday, so we're just kind of working through whatever we want. I like that, Cody. Therapy Thursday here.
Therapy Thursday. Well, Draghi gave me some therapy. I'm feeling a whole lot better after his
What's the dollar ticker symbol?
$sign DXY, or you can do UU.
$sign DSX. Didn't I put that in?
I think you had
must have
something dyslexic in there, but that's all right. We're approaching resistance here, boys, on a breakout, and a lot of the pairs are just
all right. Now, I've been doing other things this morning, and during this hour, I was going to go dive in to didn't the European didn't they have their central bank last night?
ECB.
Cody, you're a Forex trader. I'm not. I don't mess. Yep. One day I might. It's always fascinated me.
Oh, you should.
But I didn't get a chance to dive in. What did Draghi say?
So basically, there was no raise in the interest rates.
Okay, that was expected.
Which was expected, and then so they've been doing program TLTRO. Basically, we're going to stimulate our banks and help add, this fake money into the system. And they're like,
this whole fiat currency system is all going to fall one day, isn't it?
And they basically said, we're only going to do this for, a year or 2 years. And now we're in year 6. And they were like, all right, we're going to end at the end of summer. And he came out and he basically said, we can't end at the end of summer. We're going to look to try to end it the first quarter of 2020. So
we are so screwed one day, aren't we?
Yep. So basically he said, hey, we're going to keep just pumping up the system. So I was actually saying in the pre-production show that I don't even consider him dovish anymore. He's a suicide bird right now. Like, he's just trying to pull down the euro. And I looked up.
But I play devil's advocate here because I agree. I think it's a mess. And I think we live in a modern economic world, which is leading to dystopia at some point. But I'm going to leave that
long term
another time.
We're getting a dollar spike off the
yes, because
what phrase did you use? It's not dovish. It's what?
What was it? Jatinga. It's further than dovish. It's a town in India, I believe.
All right, that's too complicated. I'm not bright enough to understand that. I just need another bird. We got hawks, we got doves. You need to come up with another bird.
No, it's going to be called Jatinga is what it's going to be called.
No, it's not, because I looked it up. What Cody's talking about is he had this clever thing he thought he found where these birds were committing suicide in Jatinga, India. I looked it up, and they literally were just hitting lights that were part of the town. It disorients them.
It happens once a year. It happens once a year. These birds get disoriented, and they end up
Cody, there are no
what
suicidal birds. Birds have bird brains. Let me explain how abstract thought works, okay? The fact that we're having this conversation means we have abstract thought. Birds don't, okay?
You know that for sure, though.
No, of course, there's no way to know it for sure. But I will say, though,
I'm talking to Tim, that birds don't have abstract thought.
Well,
I'm
if
fairly
his argument is,
I cannot say
birds don't have abstract thought, then I'm going to say, you know what, you're right, because I don't think Draghi does either.
Hey, listen, all I know is the dollar spiked off that week.
And that's because the dollar to the euro cross pair is the heaviest weight on the dollar index. So
now I know a lot of people when we talk currency tune out. But this is a really potentially big deal for the entire equity market. So you might not like to listen to currency. Every central bank, and this is one of the concerns I have with gold, this is one of the concerns I have with the stock market as a whole. Everywhere around the world is doing what is dovish or whatever word Cody was using.
Monetary easing or monetary weak policy.
Everyone is racing to the bottom.
Yes.
They've been at the bottom for a long time.
Right now, while they've shown a dovish hand, is not doing the drastic measures that other countries, which could create a spike in the dollar. And a spike in the dollar of significance is not good. It's a decoupling is the phrase I use, where U.S. monetary policy and world monetary policy decouple, U.S. economy and world policy decouple. And while that's not long-term sustainable, it can last for enough to cause some short-term pain. And so you're seeing a spike in the dollar. If there is some real, like, oh my goodness, the U.S. is just strong, and you break through these resistance levels, equities are going to get hurt. Gold is going to get hurt.
Yep.
Oil is going to get hurt. You cannot have Boeing is going to get hurt. Coca-Cola is going to get hurt. Like companies that do a lot of foreign business. The dollar chart, I know traders sometimes, I want to talk about my whatever. This is a big potential deal.
Yeah. A book that I want to recommend to everyone out there is The Death of Money by James Burchard, I believe it is. James Burchard.
Yeah.
And that book, it really is. Like you said, Mark, a lot of people are doing a race to the bottom, and the effects of the dollar on the market, on gold and on oil and on just the economy in general is extremely important. So, yeah, even if you don't trade Forex, shortly after reading that book is when I really started getting into Forex trading, because it makes you realize that intermarket analysis is a big thing that you should look into. Yeah. And with the way that they release those policies and what's happening with the dollar right now, I mean, it's starting to push up against that resistance level. If it breaks, and actually, could we see the euro dollar?
I mean, it's a big deal. It is a huge deal. I mean, Trump, listen, you can say whatever you want about Trump, and I know some of you do, but Trump gets the market. I don't care what you say about the man. The guy gets the market, and he knows. He has been pushing recently. One of his things is he's like, I want a weak dollar. I want a weak dollar, because he knows, or at least he's been told, or at least he's learned over the last couple years, what a strong dollar could do to the entire economy and several segments of the economy. It's not good for our stock market to have a really strong dollar. And you could have a situation where, it really, because it impacts earnings. Companies that sell goods overseas, they sell less of them. The phrase these companies use is currency headwinds. All the time in earnings reports, they say, yes, our revenue was down or our earnings were down because of currency headwinds. Well, guess what?
They blame
if that dollar spikes, you're going to have currency headwinds everywhere.
Yeah, they blame the strength on their inability to manage their own company, which to me is dumb. We got a lot of good suggestions over here.
Hey, how about companies you hedge against the dollar if you're doing that? You're stupid currency headwinds.
Let's see. We had Pigeonish, we had Dodo. We got a couple of pretty funny suggestions over there for what.
I mean, so a dove is symbolically the meekest of birds. Do we have even a meeker bird? A meek. What's a meek bird?
Oh, yeah, quails. I think quails are pretty soft, pretty sensitive. They don't even fly. They just kind of hop around. We've got quails down here in.
Well, that's a dodo, right? Dodo birds like that, but of course they want to sting.
Maybe it's quailish. I don't know. Definitely interested in the bird talk, but I do have other charts I want to look at.
All right.
We're already 3 minutes over, so we better hurry.
It's all right. Say la vie. Dollar strong, euro weak. Other currencies are weak as well, Mark. They are not going to change monetary policy in Europe. And I was going to say, and I want to make one point on that. What do we want Mario Draghi to do? Everybody criticizes
Listen,
a
we're all
central
screwed.
banker.
It doesn't matter.
I mean, so they're going into a recession. They're showing weak economic indicators in Europe. We talk about it all the time. We want them to raise
Okay, well, they're not going into a recession. There are warning signs that they might be going into a recession.
Fair enough. Fair enough.
If they were going into a recession, the S&P would be down at 24,000.
Sure.
So.
All right, crude oil, and then let's look at gold, and then let's wrap this thing. Give me CL contract if you would. Crude oil is stuck in a range here, Mark. I know you're fundamentally bearish, but technically it's still kind of holding and hanging out here. Dollar up, crude up. What is going on?
Inventory, who knows? Like when things get range bound, forget logic. Like the oil doesn't want to move. It is waiting for something to move it. And whatever that spark is will produce a really nice short-term trade.
Mm-hmm.
What I've been saying on crude for at least a week now is the longer this sideways range goes, the more explosive that move will likely be. So if you're looking to have a really, really good, once that spark happens, you'll probably see pretty good movement, one direction or another. But it's just people... The debate and the sentiment is really split right now on oil. Really split right now on oil.
Yeah,
but
definitely.
a rising dollar is not going to help. It's not going to help.
It's a classic K-trade setup where you know it's going to break and run one way or the other. It's going to be interesting when we finally do get that break to see what kind of volatility we can catch. Give me gold if you would. Last but not least is my gold, and we are holding, Mark, a couple of dojis in a row. What you read?
Well, I don't have time to go into the extent of the technical sell-off last week. Go watch the commodity report last week where I go into more depth of it. Gold's in a tough spot right now. Like to re-enter for long-term gold holders like myself, lowering covered calls, rolling down. We talked about it on the Tackle 25 last night, rolling down strategies to help maximize your premium. Those certainly have been in play over the last week. We don't, like for individuals looking to re-enter, and I'm looking to re-enter with additional positions, I got to have some stability. And stability is not produced overnight. It's a really tough environment with that spiking dollar for gold. Because while the dollar is not the only thing, gold has two main things working against it right now in short-term price movement. It has China is the largest consumer of gold. As far as just consumer, their economy right now has investor sentiment worried. And then you got a rising dollar. So you got two big sentiment things working on it in the short term. So there's some real potential here to enter in at some point in the coming months to get into a new position. But we got to let some of these shake out. I'm doing nothing with my existing positions other than manage them according to my trading plan. But we need to have some things shake out before we look to add to it or enter into it for the first time.
And last but not least, you held a mastermind group last night, and we're run long here. We're done with our halftime report for the day, but just kind of talk about what you covered. You had a recording on the mastermind group, and then also we had one stock replacement on the Tackle 25. We took CVS off and we added a company, Garmin. Just pitch that a little bit here, Mark. And then we've got a cash flow club tonight. Set up our content at Tackle Trading, and then let's wrap this show.
No, we added Garmin. We got rid of CVS, added Garmin. Garmin has, if you look at historically on Garmin, it is a pretty reasonable cash flow environment. Stocks go up and down all the time. But it's not, I don't like crazy stocks for covered call strategies. I would rather just trade them with short-term trading strategies. But Garmin just has the feel of a nice covered call stock. one of the things I loved about Garmin in their last 8 earnings reports, they're 8 for 8 on beating on earnings. They're 8 for 8 on beating on revenue, which to me means that they're cheating and that they're lowballing their guidance to make sure that they beat it, which I like. I like that kind of strategy.
Sure.
I like that kind of strategy because it reduces the downside risk. It reduces the downside risk of having those big events work against you.
You respect a CEO and a board of directors that game theory the market for profits because then
100%.
100%. I do
my
as well.
CEO to game theory the market.
I agree. I
want my CEO to be a strategist or a Sam Walton and just a great leader.
Yeah. Yeah.
So, but in finding entry points on Garmin, obviously waiting for the market to stabilize for re-entry, waiting for price to stabilize, but because don't be surprised in the short term if you see Garmin take a little hit. There's a big moving average pocket right there, overall market sentiment. But I am certainly looking to re-enter after the inevitable sell-off because I like this stock for a covered call. It's just its personality to me screams covered call. It's just we always want to find the somewhat ideal entry point, which is probably not today.
Crew. We're done. Get out there, do some good. Cody, great job. Mark, great job today.
Hey, Tim,
stuff. Yeah.
Outstanding charts. Literally some absolutely textbook, beautiful setups.
Well, it's what I always say, Mark. And I said this to Matt this morning. Excuse me. Traders always want to pull back. They complain if they're not ready for it, and then they're not ready for the volatility. But remember, volatility creates opportunities. So many of those pullbacks, we needed a sell-off in the market to set those up. If you don't ever get price action to go up and down, if you just stay in a range, markets can get boring, right? But I appreciate that. There's a lot of really good setups out there. And remember,
the
guys,
one thing the last note of caution is I personally, and I don't know how every trader is different, I'm waiting for the unemployment report tomorrow before I initiate anything new. It's a big thing. It's a rule I have. Yeah. That, a couple of days out, I stop entering positions on the unemployment report because it can really be a short-term sentiment burst. We've seen that at least 7 or 8 times in the last 15 months.
Yeah.
Where it produced real short-term movement.
Well, I'm not saying you have to go out and load up and whatnot. I wouldn't unwind current positions that are working towards targets just because of it. But you want to always hedge your delta and look at the overall account balance. I think it's a good reminder. Cody, Friday Fun Day. Let's put something on Twitter and let's see if we can get
Friday Fun Day.
Well, he hates that one too. I think Mark hates any alliteration. I think he hates them all.
Yeah.
Friday. Yeah. No, I just like being a negative Nelly. How's that for alliteration?
There you go. There you go. All right. All right. Peace out, guys. We're done.
All right. See you guys.